you for being here. I know that Valerio actually generally, and this is well known, very rarely spends the weekends in Milan because he does a lot of interesting things in Tuscany, I understand. And this is a special, I think, and so a special thank you to you, Valerio, for having postponed your start, and he will be leaving soon after the speech. But thanks, really, we appreciate. Valerio has, as you may know, is now 10 years, I understand, CEO of Prysmian.
Yeah.
And you know that Prysmian is now 7-8 billion sales, 4.5 billion market cap, and probably is the only one public company in Italy, and that you have restructured first, and then there was a big merger with Draca, and we don't know what will come. There are rumors and other things, but we are very curious to hear you. The stage is yours. Thank you very much for being here today.
Thank you very much to you.
Valerio.
And thank you very much to all of you to being here, listening at me. I'm not an MBA of BAA Bocconi. I'm sorry. You are. So why I'm here? Can I teach you something? Probably not. Probably I can simply tell our story. The story of a company that across 15 years has been able to become the #1 in the world in the cable industry. A very difficult, tough industry. That's what I can tell you. Who we are, where we are now. Almost around the world. 5 continents, 96 plants, 89 today, 96 2 years ago. 50 countries, 89 plants, 17 R&D centers, 19 employees, 7 billion sales. That's the size of the company we have been able, I cannot say to create, because this company has 130 years of history. So it's a very long journey. Why we are so much spread all over the world? Differently from other industries. Simply because the cable business is a business that needs to be near to the market. The production cannot be very far from the market, and each market have its own specifications. If you want to be big, you must be global. Today, Prysmian is a public company. We have no majority shareholders. Our shareholders is the market, is the financial market. As you can see, 80% are institutional investors, mostly coming from UK and US. The Italian investors, being an Italian company, represent only 16% of our capital. So we are a traditional Anglo-Saxon company based in Italy. Not easy to be managed. The story, how we reached this point. It has been a very long journey, as I said, 130 years of history. I can tell you only the last 15 in detail. The company has been founded by Pirelli Cavi in 1879, 130 years ago. Then the company started to grow with the electrification of the regions, of the countries. After almost 100 years, the company was still a multi-regional, 2 regions mostly, Europe and South America, where Pirelli traditionally has expanded his activity. But end of the 90s, the privatization, especially of the customers' utilities, started in Europe. And that has drawn down the results of the business, because privatization means higher competition, lower price, frequently lower investments, and that has been what has damaged dramatically the performance of the group. In the meantime, other players, other big players, multinational players like Siemens, Nokia, Metal Manufacturing, and BICC decided to leave the game. Some of them decided, like Siemens, like Nokia, because they were more focusing doing something more interesting than cables, and Pirelli at the time took over, buying a lot of assets, a lot of theoretical market, a lot of costs. And you can see here revenues going up and the profitability falling down. Because bigger is not necessarily better, if not properly updated. 2002, the bottom. In the meantime, obviously, 2001, the internet market burst. The internet bubble disappeared. And you can see the dark blue is the telecom sales, are the telecom sales, minus 70% in 1 year. Volumes and prices. The results, obviously, went dramatically down. How we reacted? The crazy team that came at the time, guided by me, January 2002, found a company very distressed. 45 million PBIT, 650 million debt. You have a master in finance and administration, you can understand that you are technically bankrupt. We were able to survive thanks to the mother company. So, what to do? That's the problem. Restructuring. We closed 11 plants. We reduced a lot the costs, the size of the people, employees, M+S, but always starting from the top, always starting from the head, never starting from the bottom, too easy. Who has to pay the bill, if needed, has to be the top, and then down. We started to improve the profitability, to make more sound the leverage of the company, selling assets, selling the closed plants, getting cash, and go ahead. 2005, or better, 2004, Pirelli called me and told me, we decided to sell cables. I said, thank you. Because as you know, cables were for sale in 2001 too, when, at the time of acquisition of the stake in Telecom Italia, certain businesses in Pirelli were for sale, of which energy cables was part of it. Okay, July 28, 2005, 10 years in 2 months, Pirelli division, cable division, energy and telecom were sold to Goldman Sachs private equity for 1.3 billion euro enterprise value. And we went out from the Pirelli group. No more the mother. No more the mother, but 1.056 billion euro debt. Because you know private equity, you know the leverage buyout. The leverage is the name of the game. When I joined I was a general manager of Pirelli SPA. I was not in the cable industry as employee. And has been asked me to move. And I said, I can join the NewCo, but the max leverage have to be 5. Outcome 4.95. Okay, take it. 1,056 debt, 220 million pro forma EBITDA, help yourself. And we started to help ourselves. We have been very lucky, because in the meantime, the market, thanks to the construction market boom, was growing, was improving, and we have been able to drive the results and the sales. You see the sales of the company to 5 billion, thanks mostly to the copper price. Don't forget that those turnovers are affected positively and negatively by the metal price. Copper and aluminum, that represent almost 45%, if not 50% of our turnover. We have been able to reach the 5 billion sales with almost 9% of EBIT. Not so bad. And in 2007, Goldman said, okay, go public. We managed the IPO in May 2007, and we went back to be a company listed in the Milano Stock Exchange, as Pirelli was. Then, crisis. End of 2008, really summer 2008, other bubble burst. The construction market bubble burst, starting from US and coming to Europe. Here is the effect. You see, profitability didn't went very much down in the short term, but the turnover a lot. Then 2010, a little recovery, but the crisis, that's a crisis, that's another crisis. The crisis drives moves in the M&A market, because makes companies looking for extraordinary transactions in order or to sell themselves, because banks are knocking to the door asking for the leveraging, or acquiring. It depends which part you want to stay. If you have the money, if you have the cash, you can be on the side of the acquirers. If you don't, you have to look to a partner. That's the recurring story I tell to my people. In 2011, February, really end 2010, January 2011, we launched the tender offer on another big player, the number 3 in the world, Draca. Draca was another multinational company coming from the history of Philips, Alcatel Telecom, another quite big conglomerate. But that was, size-wise, almost 50% of Pirelli at the time, of Prysmian, sorry, at the time, 2.5 billion. The turnover jumped up, the profitability has been stabilized, but the consequent further second deep crisis, not so deep as the first, but crisis of 2012, 13, and 14, eroded a little bit the turnover, not so much the profitability. That's, in a bracket, is the story that has been, in the last 15 years, creating the group. Which is our business? Which is the business we are in? Is a 110 billion size business made by energy cables, 90 billion, 80 billion, nobody knows in reality, and the telecom cable business, 20 million plus, 20 billion plus, spread well over the world. Why APAC represents the largest part of the market? Because the driver of this market is the population that needs of electricity and telecommunication, and the GDP per capita. A population with no GDP per capita has not the ability to pay a bill. Consequently, it's not a customer. It's not a customer for our customers, for utilities. We need of population, and we need of population with GDP. Chinese have become a customer. Because Chinese, Indians not yet. Why? Because their GDP per capita is more or less $1,000. The Chinese GDP per capita is much higher now and is growing. Consequently, they are becoming 1.6 billion potential customers. Are not our customers, but are consumers of electricity and telecommunication. The long story. How our markets move in the long run. Energy, you see, simply with GDP growth, worldwide GDP growth, 4%. You know better than me. The GDP average worldwide growth is 4%. The problem is where? It's very differentiated. Europe in the last years lost GDP. US recovered. Asia is continuing to grow. The total compounded is an average 4% year on year across 20 years. Fibers, optical fiber cables, that's a different story. Growing much more, roughly 9%, expected to be stabilized, but I hope not, thanks to Apple. Steve, sorry, I was losing the name. Growing, you see the deep down of the beginning of 2000, when the internet bubble burst, where you have to consider that fiber price in 2000 was $60 per kilometer. Today is almost $6 per kilometer. The consumption, obviously, has grown a lot, and the market has become 300 million fiber kilometers per year. Copper is a very clear story. Going down, going down, going down, being substituted by fibers. Competition, you can choose. There are a lot of competitors. The main competitors, and that's already a very nice way to understand how our business runs. The main competitors are here. You see, we are the biggest with 7 billion. And 7 billion out of 110 are 6%. So the big player worldwide has 6% of market share. And there are hundreds, thousands of players in cables. Why? I will explain you later. The second one is Nexans, former Alcatel Energy. The Alcatel Telecom is inside the Prysmian Group now, through the Drac acquisition. General Cable, US-based multinational. Leoni, Southwire, and blah, blah, blah. You see the Japanese group here. In the first 10, but quite far from the biggest. So the consolidation is a need, because other than those, let's say, 10 players, maybe 12, there are hundreds of players, private, that are fighting every day into their neighbor market. Our position, geographically, 63% in Europe. Okay, we have born in Europe. No way. We have consolidated a number of companies, including Draka, that was European-based, Netherlands, and consequently, our exposure is mostly to Europe. 14% in North America, Latin America, and Asia-Pac. You see that the 15% of our sales in Asia-Pac represent almost peanuts into a market that is very huge. It's very huge, but it's very poor. Why? Because in the markets where the population starts to grow their GDP, first of all, they need of socket, electricity, finito. That's it. Low voltage. And low voltage is a very low-end market. Our exposure to the market in terms of segment. 7 billion energy products. What means energy products? When we sell the cable to a customer that utilizes the cable to electrify a network, to electrify an asset, to electrify a building. The largest part, 66% of our sales, unfortunately, are products. 20% of our sales are vice versa projects. We sell a connection. That is a project, because customer says, I wanted to transfer 2 gigawatt for power stations, in average, from Scotland to Wales. And I need of a cable, or more than a cable. That's a project, because the customer gives you the boundary of their problem, and you have to design everything and execute everything, including the installation, the on-service, the guarantees, everything you have to give to customers. Risks are higher. Margins are higher too. There is a lot of engineer here, other than in the product, also into the installation and into the system. Last but not least, telecom. Steve. Steve is driving a lot our demand of bandwidth. And to accomplish with this increasing demand, customers, utilities, telecom utilities, have to utilize the fibers. No more copper. Copper has not any more sense. And consequently, this is our 14% of business. Don't forget that the telecom market worldwide is 20%, more or less, of the total business. Consequently, our exposure to the worldwide market is more or less coherent with the market, with an exception that our exposure in terms of sales to the specialties is much higher than the market average, where for specialties we consider the higher margin, higher value-added products. Our exposure is mostly, almost 50% of our sales are not commodities, in a market that vice versa is 80% commodities. The consequences are our results. 2012, 2014, the 4 years of crisis of the European market, most of all. Going down a little bit in sales, but don't forget that sales are affected up and down by the value of metals. If the copper goes down to $3,000 instead of $6,000, or goes up to $8,000, our sales move. But the results, the margins, doesn't move. or shouldn't move. Why? Because we buy the copper or the metals once we have the order by the customer. And we hedge perfectly the copper or aluminum value of the order. Otherwise, we can go to Monte Carlo or to the casino playing our cash on the roulette table. The EBITDA, 650 has been the peak of 2012. Now we are at 603, slightly down. Our competitors, Nexans and General, went almost 50% of their previous profitability. Why is that? Because we leveraged in those years, you remember that in 2011 we acquired Draca, on the generation of a number of synergies, cost-cutting and restructuring, thanks to the Draca acquisition. Net income, Net income, round about 200, 250 million, with the exception of 2014, because one of the projects, the Western Link connection, Scotland to Wales, 850 million sales, went wrong. We discovered a problem in the cable before or during the dispatchment, and we said, okay, sorry guys, we may have a problem, and we do not accept to take the risk for our successors and for you to install below the bottom of the sea 800 kilometers of big cables that in the next 20 years may be not reliable. Because once we may have a problem, and we have to substitute 800 kilometers getting the cable from the bottom of the sea and installing another one, that's the famous disaster case that can cost us over 1 billion. No gain. We took our cables, 160 kilometers, the first 160 kilometers, and we brought back to our home to retest, to recheck, to be sure that was compliant and ready for and fit for use for the next 30 years. Most of your light comes from cables in New York, in Singapore, in all over the world, in London, through cables that have over 40 years of age, made by us or others. So have to be an absolutely reliable product. Net working capital, 6% of sales. That's one of the best chapters of our knowledge. Because in the cable industry, you buy the cables, you buy the copper, you pay cash. You sell the cables, you cash in 30, 60, 90 days. And that means that once the business goes up, your working capital goes to the roof quickly. And that's dangerous. Net financial position, steady at 1.5 times the EBITDA. The strategy we followed, and I think we will continue to follow. There are different businesses in the cable industry. The low end, low margins, power distribution, T&I products that we sell to utilities or electrical distributors with no brand value. It's a commodity. And there are a lot of different niches, the submarine, the surf, the optical cables, components, high voltage, and that vice versa represent a product or system that add value to the customer asset. Let's make the difference. So what's our strategy? To focus our growth here and to use the cash generated by the large chunk of these markets. You don't need of assets, new assets. The technology is very steady. You have only to keep under control your costs and your working capital. In that case, those businesses can generate cash. This is not a business where you have the risk to be pushed out by the market, by an innovation by certain competitors. Unfortunately, it's a very, very steady, slow market. And we have to deal with it. No way. The cash we generate, we invest to grow in the higher value segments. That has been the story. That seems to be the future. Consequently, cash, cash, cash. Sorry. Cash, cash, cash. If you have the cash, if you generate the cash, you have the pleasure to be able to choose how to employ it. If you don't, you have the problem to have the choice of how to survive. Sorry, you don't have the choice. To find a way how to survive. And that's the power of our company, I think. We generated an average in the last 10 years of 200 million cash per year, free cash flow, including the financial costs, excluding dividend and acquisitions. Once you make 200 million cash per year, and frankly speaking, the drug acquisition has been designed by us to generate 300 million per year. So we have still some step to do. Once you generate 200 million cash per year, okay, 100 million we used to give to our shareholders to remunerate their equity. The rest we utilize to deleverage the company. Once the game is over, you deleverage, you deleverage, you deleverage. At a certain time, and you see here the leverage before Draka, it was around about 1. You have to take a decision. Or you distribute the cash in excess to the shareholders, or you integrate other players. And that's our direction. Generating cash and acquiring other competitors. It's not easy. It's dangerous. Obviously, we acquired Draka. Very well done. 1.3 billion acquisition. We acquired an Indian player or a little company in Russia. The Russian company is not working still very well, but we invested 4 million euros. The Indian company, we invested 35 million euros, and frankly speaking, as of today, we are not even able to put a foot into the house. So, not everything is easy. But if the risk, where the risk is unknown, is limited, you can accept. Thank you very much.
Thank you very much, Valerio. You can keep this.
I've been 1 minute in delay.
I think very, very interesting. I don't know whether there are already some questions from the floor. Otherwise, if I don't see hands, you may start thinking about it. You spoke just now about risk, and you mentioned this cable story that is clearly related to risk management and so on. And maybe if we can still, it's better because of maybe the light. I have been doing the same mistake this morning, so don't worry at all. Do you have specific processes? Because I understand, especially the project side, the risk management, you could have important penalties and so on. So do you have any specific attention on risk? Because as you said, penalties may be very high, and there are examples that made companies going bust for that.
Yeah.
So maybe you can elaborate a bit,
when
please?
You play into the project business, the penalties can be, the liquidated damages mostly, can be very, very high. Just to give you an example, is something like 1 million per day for your delay, other than the wrong cost you may incur in. We have, we have a committee, a risk management committee, and certain procedures. Frankly speaking, I believe that we need to have, but first of all, we have to have and to utilize the brain, the brain of management. I know that we are Latin, maybe we are not American or Germans, but if we use the brain, we can understand and sometimes managing the risks reasonably well. Obviously, it's better to have a system, and we have it. Obviously, we try to protect the risks. First of all, to evaluate. And then, if happens, or we try to protect, really, any kind of risk can occur. Rarely, you can protect everything.
Oh, yeah.
And that happens once the company decide, for any reason, to introduce something never experienced. The problem we got with Western Link connection, the famous 850 million connection, has been a problem of innovation. We introduced into the market a cable, a new cable, able to run at 600 kilovolt instead of 500, bringing consequently more power. That is a very good help for the customer. And we tested. We tested in the laboratories, we tested in short connections. What's the problem is, or has been, because you have to learn from the history, from the experience. The problem has been simply that we never produced the 50 kilometers of cable. Why? Because 50 kilometers of cable, if you don't have an order, are 50 million. And to decide to produce, just for test, 50 million euro cable to be scrapped later is something that is not easy to accept. And we didn't do. We decided, after many tests, to produce. We got the order and we started the production. After 160 kilometers of production, an operator saw a 2 centimeters long defect on the insulation before the insulated conductor was going into a lead press that was closing everything. And you'll never see. All the piece of cables were properly tested at 1.2 million volts in the factory. But we were aware of the risk to have certain kind of defects in the 160 kilometers already in UK. The choice is,
What do you do?
what we do?
Do you recall or you take a risk?
Yes.
So you decided to
And
recall.
being the risk so huge,
You
and most of all, having the real risk of the face and the image of the company, we decided to
Yes.
recall.
It's like, I think, for the tires or for the cars, I think. So
500 million market cap down in 2 hours.
Oh.
It's a choice.
There is any question? Here, there's Marco has a question.
Thank you. Marco Piacentini, MBA and Basten. In such a market that is stable, as you said, is very fractionated, so you have in barely the 6%, you're leading the market. What is the strategic element that makes you the number one, and how sustainable is this strategic element in the future?
Okay. It is true that the market, no, I don't need. It is true that the market is very fragmented and we have only 6% of market share. But if you look at the market share we have in the submarine, just an example, our market share is 50%. If you look at the market share we have in telecom optical cables, our market share worldwide is around about 20%. In Europe is 40 plus. So the global doesn't mean the real market share segment by segment. The 7% market share include on the denominator a lot of products that has no value. In the segments where there are the value, our market share is much better, much higher. Consequently, customers have to deal with us one way or another. Then, obviously, there are competitors. What I see for the future? Growing through acquisitions. There is no other way. Because last year, just to tell you a little story, last year, 2014, under the pressure, and Fabrizio is there and knows very well, under the pressure of our commercial teams, I've been accepting to try the famous organic growth. The organic growth means to grow into a market that is not growing by yourself. But we shooted our face in a wall. Why? Because obviously, we were thinking 2014 to be better than has been. The organic growth you may have if the market grows. In our market, if you try to realize an organic growth, a growth against the competitors, getting the market share of the others, you simply are going to squeeze very quickly your margins and the margins of your competitors. No way. Why? Because 50% are metals. I don't have the slide, I apologize. 50% are metals. 20% are other raw materials. So 70% of your turnover is exactly the same of your competitor. 14% for us, globally, is the labor, 900 million out of 7 billion, including myself and the last of the workers. That may change, depending on the population you have in the company. 4% is transportation, 1%, 2% is energy, and it's more or less the same for everyone. So if you pretend to enter into a market and to get the market share of competitors, the competitor will be obliged, in order to survive, to reduce the price, and everyone will go back to the original market share with lower margins. And that's, in a certain way, maybe the name of the game. If you are stronger, if you are more efficient, if you have a lower fixed cost base, you can resist more than competitors. I don't know if I answered completely to your question.
Is there any other? Here there's a question.
Hi, I came from Chile, where a company named Adeco many years ago sold its cable copper business to Nexan. Nexan pays it back with shares, and Adeco remaining the first shareholder of the company with more than 10%, I guess.
That were more, sorry?
More than 10% of Nexan. In your opinion, why Nexan accepted this deal in the less profitable part of the business, the copper cable?
So, I know Madeco, and Madeco was not a bad player. Obviously, we are referring to a player in the cable industry that was more or less at the same level of us in Brazil and South America. Has been a pretty good company, thanks to a better market. It's not a very pure commodity market. It's protected by duties. And consequently, if you properly manage the South American market, you can make money. If you wrongly manage, you lose dramatically money because of the currency problem, because of the copper issues and whatever. Nexans decided to take over Madeco, or better, it is true that they took over giving a large share to Madeco. In my opinion, the move Nexans did has been good. The execution could have been better. You know why? For instance, Nexans has a company in Argentina, as we have. Argentina is an extremely peculiar market, where you cannot import, you cannot buy everything you need. You cannot buy copper, because you have to pay with dollars. And the government do not let you to utilize dollars. You can bring in dollars, but not bring out dollars. We are able to make money in Argentina, but we never thought to have an Italian or American team in Argentina. You need of the people that have the skill of the local market. We have, in Argentina, we have an Argentinian team. Obviously, we are in South America since 80 years. Consequently, for us, it's easier. And we are in Brazil, too, since 80 years, at the time of Pirelli.
Okay. Bruno.
Thank you very much. Very, very interesting story, and we learn a lot about the industry that is very complicated. My question is, during these 15 years, you faced several crises. Several crises. Mm-hmm. In your opinion, and up to your experience, which were the most important capabilities or skills at the company level to face this crisis?
The first crisis I've seen in the cable industry has been when I joined it, 2002. No volumes, no demand, prices going down. It has been really an headache for me. I was coming from tires, from a completely different business. And I was knowing nothing of the cable, nor the customers, nor the products. And the results were really dramatic. Dramatic means that I remember very well the numbers. 2001 has closed with 44 million PBIT, EBIT. January, -7. February, -5. So we were having a budget of 125 million euro, PBIT. The first 2 months were -12. You arrive in a new company for you, and you say, where I am. I told to Pirelli a sentence. I told, there is too much of everything here. Except the business, there is too much of everything. Too many managers, too many people, too many workers, too many machines, too many plants. Except the business, there is too much of everything. And Pirelli told me, do what you consider to be reasonable to be done. And they started from management. 242 top managers. Fabrizio knows very well, because he was the head of HR at the time. 120 in less than 12 months. Once you have too many resources, the problem is that people run and works in order to keep his position, and do not let you to clean the company in order to keep their position. So you have simply to simplify, but you cannot do starting from the bottom. You have to do starting from the top. And that's what we did. And that's really, I know that my team doesn't like. Every year when we discuss the budget, they are scared. Because the break-even point is the wellness of the company. Since 15 years, I'm saying them, guys, the last one to leave the game in our industry will be the one more efficient. As simple as that. And to be efficient, first of all, you have to have a lean organization, not too many people talking, a lot of people doing cables and selling cables every day. That's why, for instance, I introduced a control that every day, from all the factories, gives us, worldwide, gives us how much has been produced, how much has been sold, the stock, the performance in terms of customer service. Every day, available to everyone, and every week, the management team of the company has a meeting Monday afternoon, into which we analyze where we are. Because the solid ground of a company as ours is making the right thing every day. It's not a business rocket science. Fortunately or unfortunately, that's the name of the game.
Any other one? Here is one.
This is Gino Francato, Ambassador. You mentioned M&A as a, well...
Can you speak louder, please?
Yeah. Gino Francato, Ambassador. You mentioned M&A as a key, maybe the only competitive advantage you can have. Can you share with us your learnings on how you integrate a company, what to do, what not to do?
Sorry, I didn't understand very well.
On the M&A,
you're saying
how
we integrate.
Okay. What the rule of, I mean, what is the key success factor that they're learning,
right,
the learnings
exactly.
on the integration for Draca?
I understand. The biggest integration we did, obviously, has been Draca. Integrating a group is pretty difficult. It's not easy. Telling the story of Draca, I may tell a too easy story. I will do it. But I wanted to tell, first of all, to you what was the situation in 2002. Once we acquired, in 1998, Siemens Cables. We acquired in 2000 BICC, in 1998 Nokia Cables, and MM in Australia. So a lot of companies. Most of those companies were not yet integrated. in 2002, when I joined the cables, the Finnish company, former Nokia, and the Dutch company, former Nokia, they were Nokia. Who is Pirelli? And that was one of the problems. They were Nokia, thinking Nokia, proposition in the market as Nokia cable or former Nokia cable, having no integration with the rest of the group. Once we acquired Draca, one of the biggest chapters of our job has been how to integrate. Rule number one team. The 22nd of February, if I'm not wrong, the PTO went over, and consequently we took 96% of the shares of Draca. The 1st of July, 4 months later, we went out with the new organization of the group, including Prysmian and Draca. We were talking about a team, M+S worldwide, of almost 6,000 people. So the question is, how can you deal with 6,000 people coming from 2 different entities, different stories, different mentality, and you have to drive this group quickly, as quick as possible, to one group, to one team. First of all, you have to decide who drives the game. And that has been possible thanks to the way we did the acquisition. Because 2 years before, we have been not so far from closing the acquisition or the merge with Draca, but on a more pleasant approach. Not a takeover, but a merge. The merge, in my opinion, merge of equals, is the most dangerous way to execute an acquisition. As all families, there is to be someone that drives the game. And if it's wrong, you have simply to change. And that's the way we executed. The 1st of July, we gave to all over the world the instructions of who was in charge of what. Draca or Prysmian, I don't care. At the beginning, with Draca, before signing the contract, we were talking about who is going to survive, who is going not. It's always the same problem. And I said, okay, listen, generally speaking, Draca is 50% of Prysmian. I don't believe that all the smart guys are in the Prysmian Group, and I don't believe that all the stupid guys are in the Draca Group, nor vice versa. Consequently, apple to apple, the new organization should be created by 2/3 of Prysmian people and 1/3 by Draca people. But generally speaking, the rule of the game is the best person for the job. And that's what we applied. The 1st of July, the new organization was officially rolled out all over the world. Then obviously, we needed another 6 months, more or less, to reach the bottom level of the organization in all the subsidiaries.
Any other one, maybe a last one? If there is not one from the floor, I have maybe a last one. If I remember correctly, on the players list, the Japanese you highlighted were pretty small players, and I think I didn't even have or see Chinese ones, in an area where you showed that the market and the GDP, being the business driven by the GDP, I would have expected probably some more, let's say, APAC player in that picture, and maybe there is an explanation. I was curious to understand a bit better why this is, and is there any specific reason?
Can I have back my presentation?
Yes.
No, that's not.
I think, can you go back? Can you, one of the slides? Non so se non funziona.
Probably the presentation is gone. Don't worry. Ah, okay, he's here. Thanks.
Yeah, go ahead. Go ahead. Here. This
Here
one,
we are.
no? This one.
What's the point? Furukawa, Hitachi, Fujikura, Sumitomo. 4 big players, big players for their market. But the Japanese have always, maybe a part of Toyota, some difficulties to move outside of Japan. For a matter of culture, for a matter of maybe that they are too pleasant for the Western markets. No, I don't know, frankly speaking. They are always the same. They didn't change. They did not create a very big player, you see, 4 players.
So no consolidation internally?
Not very much.
And no Chinese also?
No Chinese for a simple reason, not yet. Because we are in China, we have 9 plants in China as Prysmian.
Okay.
The life is very, very tough in China. We are the 6th player in the Chinese market, the number 6, with more or less 4 billion renminbi sales. The number 1 are Chinese players that have a large chunk of a very low-end business. Because the China market is mostly construction market and distribution market. The margins are negligible. The specs are managed by fantasy. And consequently, it's a very tough market if you consider to be in line with specs. A 220 kilovolt cable that we are one of the major supplier of China grid in China on the 220 kilovolt, the very big grid cables. We were seeing margins shrinking year after year. And we started to test and to check the competition cable in the markets. Technologists started to analyze all the details. I said, okay, leave on aside. Wait. Simply wait. The 1 meter of Chinese competitor cables was lighter 10% compared to ours. Guys, we have a problem. Because if raw materials represent 70%, maybe also more, of the cost, those competitors have 7% higher margins than us. We have been able to reduce the gap from 10 to 8, sorry, to 2.
Okay.
And now we are more stable. But obviously we have not been able to match the under-spec in the market.
Okay. Thank you very much for this very interesting presentation.